the DAS newsroom, and this is the #1 best trader competition, novice competition. This is the week 3 review, and my name is Michael DeJoy. I'm the Director of Educational Services here at DAS Trader, and I'm a licensed professional. I'm joined by my co-host, Jill Molandrino, Global Markets Reporter from Nasdaq. Jill, how are you?
Good, doing well. Good to be back.
Good. All right, so we have the big miss in Netflix's loss of subscribers for the first time. Now, I obviously expected this. I figured they lost the entire Russian market. What I was a little surprised about was that they actually lost subscribers in every market except for Asia and Pacific. They pretty much, I don't know what that means for big tech. Is this the precedent for earnings season that there's going to be this kind of growth stocks that has kind of peaked? Maybe this is a sign that these streaming services have peaked. What are your thoughts on this, Jill?
You know, it's interesting. I kind of do a lot on the academia side of what's happening with new media and digital media innovation for my grad work. And this is something that we're talking about in conjunction with what's happening with earnings season. And I think what's happening here is we're at an inflection point, and the pendulum is always going to swing both ways when it comes to media, when it comes to politics. This is nothing new. This has been going on at least since the 1800s. So I think what we're seeing here is what's classic demand destruction. Subscribers are only going to pay for so much at some point. You know, Netflix took up their fees. Is there enough content out there to keep people paying for their fees? I also think with the type of messaging that content providers are putting out there now, that shareholders and subscribers are starting to align their dollars with that. We certainly see what's happening with Disney and the battle that they're having in Florida. So I think a lot of this is becoming part of a values-based investment as well, which is really interesting. This is something that we're kind of contending with for the first time as investors and shareholders, just to see exactly how values-based investing, what companies, and this is bigger than Netflix, actually did a really interesting report on CNBC with this today, how companies are making political statements. And it's almost becoming like, are you a red or blue company? So this isn't specific to Netflix, but I think it'll be interesting to see how shareholders and how consumers of these products start to vote with their money as it relates to the positions that these different companies are putting out. I just bring it up as we're talking about Netflix because Disney, obviously streaming, falls into that realm. But I think when you look at some of the content that comes out of Netflix and the fact that they're charging more, it just gets to a point where possibly we're seeing demand destruction. And we've been talking about that with inflation hitting and interest rates moving higher. Consumers are going to have to start to make these critical choices. So I think it's kind of a confluence of all those factors.
Yeah, I mean, I just look at Netflix from a business model perspective. You know, you have millions and millions of subscribers. When you reached the majority of those subscribers, you just kind of run out of things to do. And their model is that binge watching model, which doesn't kind of drag it out. You give everybody, you just kind of shovel content against the wall. And people start to say, you know what, I'm a little bit tired of it. Some people start to cancel after they were, stuck in the house for 2 years watching Netflix. They're like, I want to go out and live my life a little bit. So I think it's a lot of factors coming into play. And I definitely think that we've seen this is not the first company that's done this. It's also kind of with Facebook and Meta, where they've kind of moved off of their core business. Their core business was Facebook. People don't care about Facebook that much. They kind of got a little bit of a rebirth with Instagram. And then sure enough, now they've kind of shifted their whole model to this new kind of untested, not their core business, which is Meta. Netflix is very similar in that they've kind of reached everybody they were going to reach. And then they've kind of now they're losing subscribers. Certainly Russia played a factor, but it was not the whole story there. So,
Mike, it's interesting that you bring that up because I remember earlier in my career, talking late 90s, early 2000s, that retail was kind of always the one that fell in the trap of, okay, so you're really predisposed to what the latest trends are, what teenagers want, and it's almost like what social media is now. There's always
Yep.
going to be the next platform. It's
Yep.
Insta today, TikTok the other. Facebook kind of came out before the digital natives really had the ability to be on platforms standalone without their parents and so forth. They could do TikTok and Insta, and I didn't even know the other ones that are out there. So I feel like when it comes to social media and content, they are basically what the retailers of the 90s and early 2000s were, where they were really married to what the trend cycles were.
Mm-hmm. Yeah, I could see that. I could see that and because young people mainly use Snapchat, they use TikTok, they use different platforms. So, all right. So the news. So most analysts are now saying the R word, right? Now analysts are actually talking about possible recession. So we're seeing a lot less. Now, I was always skeptical of the soft landing because I really feel the Fed is really way behind in their interest rate hikes. But certainly today's drastic market sell-off is the market finally coming to grips with the potential for, I looked at it today, it was like 94% of a 3/4 basis point move in the next rate hike. That would put us up a whole percentage point for the year. Certainly, I think that we're definitely going to get at least a 50 basis point hike. But now even people are talking about a 75 basis point move on the next Fed meeting. So do we have to be worried about a recession, Joe? What's your thoughts on this?
It's interesting. We hear recession and stagflation thrown around a lot, and there's always a comparison to the 80s, 40 years ago, when we saw inflation at the levels that it's at now. But I read a really interesting report out of Commonwealth, and their chief investment officer made a great point that the economy and market structure are very different now than it was then. Back then, our economy was an energy-based economy, right? Now we're a technology-based economy. So it's almost like you're comparing apples to oranges. It's two very different things. Think about it. Energy is, I think, 4 or 5% of the S&P these days. Yeah. So it's a very different kind of economy. I also think that the other thing that we're grappling with, rising interest rates, is that going to be enough to tamper inflation? There's more forces at work than just raising interest rates. We know there's a lot under the surface. I think what's really, Mike, the variable is when we're going to start to see demand destruction, like we were talking about before with Netflix. At some point, subscribers, some point consumers are going to say, this is just not the price we're willing to pay. And I think that's really going to be the inflection point when you see home buyers, okay, we can't pay at these levels, we can't afford these interest rates. We're not spending discretionary money because we're paying for groceries and money at the pump. So I think it's when demand destruction comes into place that's really going to be the difference here.
Absolutely. It seems like we're starting to see some of that now, but we certainly will see it to come into play more as people run out of savings and they run out of space on their credit cards. Because I even saw some numbers that were saying that credit card and consumer debt was increasing as well. So what are some of the best stocks to play during inflationary times and in a rising interest rate environment? And how has this played out in the past? I mean, I know from my own recollections that and my own trading that commodities obviously start to go up. We did have a little bit of a pullback in gold and silver in the last couple of days, but for the most part, they are way up near their all-time highs. We have oil and natural gas also up. I think it was 2008, oil got up to about $147 a barrel. Certainly, we're getting up there with oil prices. All metals and foodstuffs seem to be food commodities are also kind of skyrocketing. We have corn at all-time highs, wheat, et cetera. So there's a lot of things to keep an eye out for. Obviously, technology is very, very interest rate sensitive. And I guess big economy, consumer cyclicals also seem to be very resilient. What are some sectors that you think are a good place for people to look for some protection?
I would agree with you with everything you've said there. I guess the question is the ag and energy play over? In addition to inflation, of course, we have the supply chain issues coming out of Russia, Ukraine. Of course, we know their contribution to the energy and the soft ags in the commodity space. So, but that's something that's been ongoing at this point. I think the initial run up in that trade could potentially be over at this point. Consumer staples, of course, over anything that's discretionary, of course, over anything that's technology, are the areas you're going to want to be in. But Mike, you know what? We're also in a very unprecedented environment when we think about it from an inflationary perspective, because we're also coming out of the COVID environment where we were for the better part of it on restrictions or lockdowns. So you also have the demand on the services and travel side of it. So, it makes you wonder, okay, so we're not going to put our money into consumer goods. That's all we spent our money on in the past few years, but we're, going to spend money on travel and experiences and services and so forth. So it's kind of an unprecedented environment because there is a pent-up demand. There is a pent-up savings for those experiences. So it makes you wonder, like, really what the true picture is going to look like.
No doubt, no doubt. I tell you, the other thing that's kind of surprising is I'm down here in Florida right now, and I'm traveling to Mexico in the near future. And flights, I mean, people want to travel, but they may not be able to afford travel. The prices of airplane tickets have gone through the roof. They have skyrocketed. Yeah. A trip to Europe to do the European vacation, it's at least double what it was last year.
It definitely is. We were looking at friends of ours have a summer home in the south of France, and just to fly into Paris, it was shocking. And I'll tell you what, I was in Miami last week for a conference and spent a long weekend there. And I know Miami's expensive. I know New York, LA, all those are expensive. I was shocked, absolutely shocked by how expensive Miami was, more so than New York, because, okay, granted, there's a number of conferences going on. Everyone and their mother was down there for crypto. Everyone was, spending money like it was the last night on earth. But it was shocking, the costs down there.
Yeah, it really has skyrocketed in terms of the cost of everything in South Florida.
Yep.
But in Florida and traveling to Europe this year is an astronomical cost. I mean, way up. And it's kind of surprising, to me how much it's gone up. So we all want to get out there and spend our money and have a great summer, but the price of things are really going to cut into what people will spend their money on.
And that's when you think about demand destruction, you're only going to spend. So I mean, it gets to a point where, okay, I might have the money to do so, but does it logically make any sense?
Does it make sense to spend it on this? Yeah, right. Like even if I got a free place to stay in the south of France, if I'm paying $2,000 for a round trip ticket, maybe I might not. So, but all right, well, let's jump into our trader competition. This is week 3 of the number 1 best trader competition. This is April 18th to April 22nd. And we have 0996 back in the lead. We have all 8 of our first number 1 best trader competitors that are all 8 are green. So 1 through 8 are all green and positive. And then we have 9 and 10, which we've seen this very often in the past. Just by being not down so much, that they are in the top 10 as well. So best 0996 with a day's gain of $8,394 for a total gain of $8,483. I think that number 0996 had dipped down in the ranks and then came back up. So good work in kind of chipping your way back up. We have best 1000. Pretty steady with a $1,000 gain today from the FR Baird community, and $7,785 in total gains. And then we have best 1003, not trading today, but holding on to 3rd place with $5,255 in the green side. So guys, it's not too late to take the lead here or get into the top 10. All you need to do is be green and profitable to be in the top 10. and or not down. Anybody who is in the top 8, really, it's anybody's competition still. So anybody can really have a great week next week. And here are some of the stocks that were the most traded. We have the biggest by volume count today, which is ATER. We have VLON, which is number 2. And then we have SoFi, which has been all over the map this week. It's been probably the most traded stock in the competition this week. This is SoFi. And then we have VERU, which is coming in at number 4, and MITQ. Did any of these stocks, jump out at you, Jill?
Well, SoFi does. I'm not as familiar with the others, but I will say, Mike, I think out of all the competitions we've been covering, it's got to be 2 or 3 years, at least 3 years at this point. I think this is the best performing block of the group, if I remember correctly, which is so interesting because the markets have been the most volatile as they have been since you and I have been covering the competition. So I think that's interesting. Another trend I'll note as well, what I'm seeing with the most heavily traded symbols that we see in front of us here, they are more well-known names than they typically are, which is interesting as well. So some cool trends to see emerging here. Definitely more sector representation here than there typically is.
Yeah, and I mean, so here are some of the old standbys. We have MU, right? Micron's always an old standby. AMD is an old standby. We have Pfizer is an old standby. We have Bed Bath and Beyond, another old standby. I mean, Apple, I mean, Snapchat, Twitter. These are very Neo, Palantir, the TQQQ, which is really big on the retail crowd. So certainly you're seeing a lot of top name stocks right from the major indexes being the most actively traded stocks. And it's a very volatile set of market conditions. I would say that most of these stocks that are in the top 5 anyway are these kind of one-hit wonder, poppers and droppers. They pop into the stratosphere for a few moments, and traders like to trade them. They tend to be lower priced. You see all the top stocks are under $10 with the exception of VERU. So, all right. Well, I'm going to move right along into our competitors, reviewing our strategy, review what you've been successful at, what has helped you trade successfully in the past. Have you made any mistakes? What have you learned so far in the competition? If you have any additional comments or things that you'd like to see on our review, you can certainly email us at info@onebesttrader.com. And this is our spring novice competition. It runs until April 30th, which we've got about 1 more week left to go. You can certainly find out more about the competition at One Best Trader and go on any of our social media outlets at One Best Trader on Twitter, Facebook, and Instagram. Well, thank you so much, Jill. It was great seeing you here. I hope you have a great weekend.
All right. You too. Thanks, guys. Take care.
All right, Jill. Take it easy. Have a wonderful weekend. All right, let's jump into our market analysis. Let me bring up my Dash Trader. All right, so here is, really a bloody day on the markets. A real bloody, big down bar on the SPY. This is a very big breakdown on the markets overall. And it's taking us almost to the next level of support. Now, when you have a big red bar such as this, you usually expect a gap down on Monday. So I would expect a gap down going into Monday after a big nasty red bar like this. It's pretty much taken us back down to the market lows. Let's take a look at the DIA. You can see on the DIA, we broke back below our moving averages, a real big break. And this is the most interest rate sensitive of all, which is the IWM. IWM is the most interest rate sensitive, the Russell 2000, and it's a big breakdown. It may actually break this key support level. Let's take a look at GBTC. Bitcoin now trades with technologies, also to the downside. Pretty negative chart here with lower highs and a lower high and a possible breakdown below this most recent low. Let's take a look at gold. Gold has not been performing so great. It's kind of off of its little latest peak. But overall, the pattern is bullish. And it might be, again, getting ready to make a move to the upside. This is gold. This is UNG. This is the natural gas. Certainly a big drop in natural gas. Now the question is, do you buy the dip, buy the pullback? The headwinds for natural gas remain good, but if the markets are worried about demand destruction, then that will certainly affect some natural gas usage. Next, you have the USL, which is the oil contract, also looking pretty good, looking like a bull flag to the upside, but certainly in the midst of a current pull down. Let's take a look at the one that we talked about today, which is Netflix. I mean, this is just such a bloody chart, but pretty much just falling off the chart on Netflix. Really, really horrible looking chart there. Let's take a look at some of the other big tech companies like Facebook, also breaking down right with Netflix. We got Apple, very bearish to the downside, a big breakdown today in Apple. So, they say so goes Apple, so goes the market. So certainly not boding well for the market at this point in time. Let's see Tesla. Tesla holding up as usual better. It's kind of a cult stock, but certainly Tesla holding up pretty well. Twitter starting to gave up a little bit of the ground from the Elon Musk tender offer, but certainly Twitter bucked the trend as well. MRVL breaking down to all-time lows or recent lows. A lot of bearishness in this market. Snapchat also down back at its lows. So a lot of bearishness in this market for sure. Not pretty much. Oh, let's take a look at some of the stocks that were on our list here. Let's just see this here 1 second. SoFi. Let's see SoFi. SoFi just breaking down, breaking to new lows. It's kind of in the cheap stock territory now. Certainly has been in the news quite a bit as well. Go back here. ATHE, ATER. This is definitely a popper and dropper stock. VLON just popped up today from sub $1.25 to $2.19. So this is a popper and a dropper. VERU, nice bull flag forming, but certainly a popper and dropper from last week, and it's just kind of settling into a continuation range. MITQ, popper and dropper as well. So we have a lot of action here, and there are different stocks popping and dropping. And these are the stocks that the traders in the competition have been trading for the week. But certainly looking at this DIA, it looks like we got some more bearishness ahead in the near future. On that note, I would like to bid everybody farewell and have a wonderful and happy weekend. And until next week, when we can wrap it up for our #1 best trader competition. All right, everybody, thank you so much for joining us. And until next week, this is Michael DeJoy signing off.